All right, so I wanted to talk about two earning trades I made yesterday, so Thursday before the close. One of them is on CHWY. So Thursday before the close, CHWY was trading around $60, from $58 to $60, and I sold an out of the money put credit spread at expected move. And expected move I calculate by looking at the straddle. So if I go to option, look up CHWY, I basically look up the straddle value, at the money straddle value. So for example, right now CHWY is at 55, the straddle value is $1.46. But of course, yesterday before earnings, premiums are overpriced. So when I looked at the straddle value at around 60 yesterday, it was around $7. So I sold an out of the money put credit spread at 60 minus 7, so 53 strike. And I went with a 52 long strike. So sold the 53 put, bought the 52 put, collected 16 cents, did 10 contracts. So that gave me $160 credit that comes in. As long as CHWY stays above 53, I keep the premium anywhere above 53. CHWY opened this morning at around 60, 61, but now is taking a dive. So I ended up closing the trade just in case. Didn't want to lose on this trade because max loss is pretty high and expiry is today. So I won't even have time to manage the trade if it goes against me. So I ended up closing the trade for 5 cents. So I made an 11-cent profit times 10 contracts. Let's now talk about commissions. The other earning trade was on Peloton. Wow, it dropped to 89. It was trading at 98 this morning. So yesterday, Peloton was trading at around $90. I sold an out of the money put spread. Same idea. I looked at the straddle value of Peloton at 90. I think it was around 13 or 15. So I ended up selling the 75. If I go to orders, executed, look up Peloton, I ended up selling the 75.70. There you go. 75.70 put credit spread, collected 80 cents or 82 cents actually. So as long as Peloton stays above 75 by expiry today, I keep the premiums. I ended up closing it today for 2 cents because it was really cheap. Didn't want to take the risk in case the market drops, although it's really far from 75, but who knows. Peloton opened at 98, so it was considered really far, but I know this market can do anything, especially Peloton is a bit volatile, so anything's possible with a stock like Peloton. I was actually strongly considering selling a naked call on Peloton. I talked about it a lot, but I didn't do it. The 135 strike. So I could have sold the 135 strike. This one was trading during the day yesterday, was trading for almost 77 cents. End of day, I think was trading for about 30 cents. I could have sold some contracts here for 30 cents and it would have been all profit. Basically, when I sell a naked call, I collect the premium. The risk is, the way I win is as long as Peloton stays below 135 by expiry, I win. But if it goes above 135, the loss is unlimited. The risk is unlimited. If it goes to 140, then I lose $5 times the number of contracts I do. And it was only asking for $428 of margin requirement. So if I had used all my buying power, so if I go back to my balances, you could see total maintenance excess US is 42K. So just for fun, let's just calculate what would have happened if I sold, if I used all my buying power to sell naked calls at that strike. Yesterday, before the close, it was trading for 29 cents. So if I've got 42,000 divided by 428 was the capital required, I could have done 98 contracts. 98 times 30 cents or $30 would have been $2,940. I could have made $2,940 US profit today if I had done that trade yesterday. But of course, thing is, I'm scared because I don't know if Peloton can go above 135. A lot of stocks have gone crazy after earnings, like Zoom went from 310 to 465. CRM also went up like crazy. RH went from, I believe, 300 went from 320 to almost above 400. So it is possible for stocks to jump up. You also have TWLO last earnings, not this one, but the one before went from 122 to 180. So there's always that risk if it does make that crazy move up. Now this time it absolutely didn't. It went up a little bit and now even dropped almost to yesterday's close. So it would have been an easy $2,900 profit. I could have done 2 contracts just to play it safe. It would have been a $60 profit. But when you see something so obvious, you're always so obvious of winning, you're always tempted to do more, knowing that it's almost 100% guarantee that it'll win. or 99.9, but there's always that 0.1%. If it happens, then you're completely screwed, because if Peloton did end up going to 140 and I had 98 contracts, basically I would lose 5 minus the 30 cents that I collected times 90 contracts times 100. I'd be down $42,000 if Peloton goes to 140, and who knows what it goes to. It could go to 145, 150. It's unlimited, basically. There's no cap. So that's the risk. Very small risk, but scary risk if it happens. So yeah, so these were my 2 earning trades. Just 2 simple out of the money put credit spreads on CHWY and Peloton. Closed it today. So if you have any questions, in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.